That was a special discussion on what's happening in rural India. Let's also welcome in a very, very special guest now, Atul Sahai, CMD at New India Assurance. They only tend to speak after results. They have declared their numbers, and Mr. Atul Sahai is with us. Sir, thank you so much for taking our time for us. Could you just start by the quarter? Of course, last 10 days would have been impacted by what's happening as far as the lockdown is concerned. Could you just tell our viewers how should one read into the quarter, considering there was a lockdown, plus it was one of the strongest period for the company as it was Q4?
Yeah, thank you so much for having me here. Yes, we sort of did very well, especially given the conditions, because the conditions were extremely challenging for any sort of business. So the very fact that we continue to show profits quarter after quarter, like we started in this year with a decent profit, and it continued in Q2, Q3, and again in Q4. Comparatively, there was a loss earlier last year, so we could show profit this year also. So we are very happy about it. This is just reflective of the kind of efforts that we put in jointly as a team, and we stuck to the basics of the insurance, and we saw to it that we do live up to our brand value, our great brand value that we have. And we have sort of done well. Of course, the circumstances were extremely challenging, and business has been hugely impacted. But the impact came in the month of March, and then, of course, it has been continuing. So, all well so far. Hope that we have coped well, and we'll keep doing well in coming quarters also.
When we just talk about health insurance, can you just tell us about the outlook for health insurance now, considering this pandemic, how people are, reacting to this? Do you expect more traction, people to be more than sufficiently covered, even in a post-COVID world?
Yes, definitely, because what is happening that insurance is basically, it all depends on the awareness, and it has awareness levels have risen. So more and more people are seeking insurance, especially medical insurance. But as far as the other property insurance is concerned, it is directly related to the general condition of economy. So it has taken a hit. But even if I talk about this current quarter, we are of course talking in reference to the quarter that ended 31st March. Even the current quarter today, it's 1st July. So we have done so very well in this quarter also, and business has been impacted. So I think we'll be able to go ahead well. And especially as far as you were talking of medical insurance, there is lots of awareness, especially because of this spread of COVID-19. And we as a company quickly launched 2 specific products for this. And we have been able to attend to our claims very quickly. I'm very pleased to share with you, not the numbers of course, we have had something like 4,800 claims so far against New India Assurance Company for this COVID related. And I'm very happy to share that each and every claim, the cashless facility has been granted. And there are a few claims where people have opted for this reimbursement to hospitals. So wherever they have come out of the hospitals, those claims have already been made, and where they are still there. So those claims will also be settled very quickly. So it is going to impact, maybe the medical premiums are going to increase, and we'll be reaching out to people. We'll be further spreading this awareness so that more and more people are covered. But usually what happens in insurance world, whether it is property insurance or medical insurance, usually the most needy ones do not opt for it. So I suppose that it will serve as very good opportunity. People will be aware, and this insurance net will be expanded. And more, otherwise also the governments are expanding their Ayushman Bharat coverage. So most of the people will get covered, and I hope that all of us are adequately covered against the medical insurance.
Okay, all right. Hi, Mr. Sahai. This is Mubina as well joining in. Just a deeper perusal of your financials, the combined ratio still remains high. So if you could just walk us through the reason for that.
Combined ratios, yes, comparatively, when you compare with the private sector, of course, they are little high. Because look, public sector has got its own history, because as far as our expenses of management are concerned, they are comparatively very high. And majority of this expenses of management pertain to employees' salaries and fixed expenses. So this expenses, the EOM can only be reduced by increasing the business. There is no other way out. So that is why we keep trying to do that. And my combined ratio as on date, if you see that my combined ratios are already down by some major 7% in comparison to the last year. So that is the reason we have grown our profitable business. So accordingly, the combined ratios have come down. And another thing I would like you to understand in combined ratio, I do not know whether most of the people would be aware of it or not. Whatever funds we have, those funds are usually divided into two segments, which is called shareholders fund and policyholders fund. So if you look at policyholders fund, these funds consist of what we call technical funds. And these funds are basically provisions against the claims that we have to make, we have to pay. So basically what I'm wanting to say, this policyholder fund is the fund that pertains to the policyholders. So because we are a large company, we have got large amount of such funds. So we generate certain income on that. So if you just include the income that accrues out of this policyholders funds, if you take that into account, then you arrive at something which is called adjusted combined ratio. And this adjusted combined ratio is approximately 97%, which is comparable to anybody, which is comparable to, in fact, which would be better than any company. So that way, I suppose most of the people would miss looking at it. So that way, our ratios are very much in control. It is indicative of our profitable growth.
You know, the IRDAI had recently withdrawn all these long-term package third-party and own damage policies, insured cars for 3 years and two-wheelers for 5 years. So what's your total exposure to motor insurance? And if you could share your outlook on this segment?
Motor segment, even if you want to be, you cannot be very sanguine about it right now, because we all are aware that motor segment, maybe the vehicles are not getting sold out or something. People are not buying. So it is hugely impacted. As far as this IRDA coming out with this new changes, it's a welcome thing. What had happened that in last year or so many kind of things came. Now you can give this bundled product. Now this particular OD section can be given separately. This TP portion can be given separately. So that had created lots of confusion. So we are back to good old world. So there is one clean policy. So it is good. But motor, as far as horizon of motor insurance is concerned, I think that it is still going to take at least 6-9 months before we finally go back to good old days and we start doing good business. Motor business is badly impacted. As a sector, the motor business is down.
Right, sir. Thank you so much, sir, for taking out time for us always.